Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Great to be with you on this Monday, June 23rd. Got Connie Hill in the that is with us as well, and Michael Fairborn as well. So we welcome all of you here today. And just real quick, we had an interesting weekend with some of the news, and we'll talk about that, how that's playing out in the markets here today. So just real quick, our focus here today is we're going to talk about some bearish technical analysis. Now, we're not saying on all stocks, but there are some stocks that are under pressure. And I also want to kind of talk about very specifically where the indexes are, where the sectors are, and also at the same time, where volatility is. About 10 days ago, we actually went long volatility. I want to talk about that, kind of seeing if we're seeing that continue to play itself out. Might that be a continued theme here? Now, when I talk about bearish technical analysis, I don't take it from the standpoint of fear. We know that things go up, they go sideways, they go down. It's a part of the cycle. So the investor is really trying to actually really trade around volatility. When volatility actually goes up, usually prices tend to fall. So we want to kind of talk about that here today. And you might say, James, that's my weakness. Well, good, because it's something we've practiced frequently, and we'll get a little bit more practice here today. And when we talk about technical analysis, you have to understand that we're going to link it to stock trading or option trading. And so as we go through that, we will do the examples of both. Now, remember, you can follow myself and all of us on X. My handle is @JamesBoydCS, so follow us there. Just real quick, also, as we get going, quick reminder that the information here is provided for general informational purposes only. Options carry a high level of risk and are not suitable for all investors. And also remember, when we talk about the Paper Money software application, that's done for educational purposes only, but it's a great tool, okay? As you're learning stuff, it's always nice to have a place where you can practice. And do you have questions from what you're doing in the Paper Money account? And also remember that investing involves risk, including loss of principal. Now, today, what we're going to really be talking about, as I mentioned, we'll just take a quick look at VIX first, okay? Because that's probably going to tell us something about where the markets are. Then what we'll do is we'll take a quick look at sectors. And then from the sectors, we'll also we'll be looking at some of the prices, like oil and gold and so on. And you'll see why in just a moment, okay? But the biggest thing we want to really bring up is kind of like, usually when you're learning, you learn about bullish technical analysis. Well, the other side of that is bearish technical analysis. And then from there is, how do you have the confidence and the understanding of strategy to apply that to a Paper Money account? That is our goal here today, okay? Now, what I want to do here just real quick is, let me just pull up, I'm going to pull up the Paper Money first, and let's take a look at the VIX first, okay? Now, if I pull up just real quick the VIX, you're now going to see, so about 10 days ago, we went long volatility. So let me ask you a quick question. How do you go long volatility? Does anybody know? How do you go long volatility? There's a couple ways to do it. There's not one right answer. But if you were thinking, hey, James, I actually think volatility in the market is going to expand. Well, how do you try to capture that gain? Well, 10 days ago, Kevin and I have a class on Friday. We mentioned a symbol that maybe an investor might consider, okay? Someone might say, well, James, I maybe did it through the VIX options itself. Someone else actually might say, James, I went to Ben's futures class on Tuesday, and we actually took it from that route. So it's not just, I just mentioned 3 different ways you could do it. But the other way you could do it is you could say, James, I'm actually looking for some bearish opportunities on stocks and or options to trade bearish, thinking that the price is going to decline. So there's really 4 to 5 ways, really, if you think about it, to really be long volatility. So when I say long volatility, you're actually thinking the volatility of the market is going to expand or get higher, and things are going to drop. Now, usually if the VIX is actually above its moving averages, prices on many other instruments are probably below their moving averages, okay? Now, I cannot pull up that position we have from the other day, but that's going to be a continued theme here over the next couple of days. That moving average crossover that we actually saw in the last couple of days, that is still there. That green line, that green shading there, still actually pretty strong. Even though we actually sold off and then went up to 22.5, that green shading is still there. If that green shading is still there, we're trying to take the paid money count is trying to take a long position, forecasting potentially could that continue to rise. Let's take a look at how the SPX is playing out, right? So we saw what volatility is doing, but let's kind of zoom in on the right-hand side of this and kind of say, okay, we saw the VIX with green shading, and then what we're seeing really right now is the SPX red shading. Now, what does bearish technical analysis look like? Well, it starts with typically the 10-period moving average going red. It did. It actually started with the moving average crossover, strike 2 or strike number 2, okay? And then so it's kind of worsifying. And then the 20-period moving average right there also going red as well. So what is that telling you? Does that tell you to buy? Does that actually tell you to say warning, caution, the whole 9 yards? And you're going to see that really since 617, if we're talking about the index, it's really been in what we call the step 3 condition. Okay, step 1 is the 10-period moving average going red. Step 2 is the moving average crossing over. Step 3 is actually that 20-period moving average going red. Okay, and what you're going to notice is we've been in that step 3 for what, 3 days now? Okay, so it's not unthinkable. This is why I said when the moving averages, when we get that, okay, that's why people adjust stops. This is why people manually exit the positions, potentially if they wanted to, or try to. You'd have to check the volume. Third, you'd also maybe say, look, could I put on a bearish position and or a hedge? Now, if I had told you, let me throw it out like this. Let's say that Iran had what happened over this last weekend, and we were kind of talking about that was going to happen this weekend. I think people would say, oh my gosh, this market is going to crater. The market is going to be whatever, okay? And the market, if you look at this, it's like flat. Now, so you'd have to say that the market is taking this in strides. It's not super bullish, but it's probably maybe the best case scenario given what happened over the weekend. We're just being truthful, okay? I mean, right? Now, if I take a look at the NDX and say, what is happening there? Is it just completely selling off with what we saw over the last 2 weeks or so? Same thing. Did rally up above the 10-period moving average, faded down a little bit. We talked about international markets on Friday, kind of cooling off a little bit. And if you look at domestic markets, as we're talking about SPX, NDX, Dow, and so on, we're kind of seeing that kind of pulling back. Not a big, massive pullback yet, okay? Now, I want to bring up, so when we talk about NASDAQ, what we need to understand as adults is, does this mean that everything is down? And the person says back, yes. And that is a false answer, okay? If the market is more neutral to slightly down, there will still be some stocks that are actually going up. Still. Now, the harder that the market goes down, the greater the probability that the other ones that are still holding up start to come down with it as the market goes down further. So it's very important you understand that, okay? So there will be some bullish positions, and I'm going to plan on taking some bullish examples here. I want to fast fire through some of the sectors. Let me tell you where it's not been pretty, okay? Now that's a southern way to say pretty, okay? Some of you are like, I don't know what pretty means. Pretty, okay? Healthcare. Boy, the last couple of days have been tough. That's all I'm going to say about that. You could also bring up, we saw with crude oil, okay, this has been a question. Friday, I talked about some investors might be wanting to try to do a short position on crude. That's all we're saying, okay? If you actually looked at the contracts, okay, front dated months, back dated months, some pretty high premiums in the shorter dated months compared to the back months, if you look at my X page. And you have to also understand that there's some investors who anticipate what might happen. And when that sometimes thing happens, it's already priced its way in. If you would have said that that would have happened over the weekend and oil is down, most people would have pulled their hair out unless they realize that investors anticipate. If it takes me 30 days to realize what's going on, it doesn't mean other people took that long to realize what was going on, and they already put those investments and or trades in, okay? That's why I said that comment on Friday. Okay. Now, when you look at gold, gold is actually holding up better than silver. We'll talk about NEM in just a moment. That's one of the positions. So here we are as investors. We're dealing with kind of some bearish technical analysis. Does that make sense? Now, I want to ask you just real quick. Luke says, I like how you say that, JB. Look, I love Southern people. My goodness gracious alive. Yeah, it's great down there. I'm not going to lie. I want to move to Franklin. My wife's from Franklin, Kentucky. I lived in Bowling Green, and it's not Bowling Green, it's Bowling Green, and was married in Franklin, Tennessee. And yeah, I would definitely like to get back down there. I'm not going to lie. Okay. Now, just real quick, one thing I want to kind of point out here is, so as investors, we're talking about learning technical indicators, right? We're saying, okay, the technical indicators we're seeing, they're kind of more bearish. And so the investor is managing a portfolio. And they're saying, okay, with my knowledge of technical indicators, what do I do with the knowledge? What do I consider? I mean, that's the question, right? Well, let's go back to just real quick the paper money portfolio, and let's take a quick peek, okay? Now, one of the stocks we talked about, for example, going long some energy stocks. Now, energy stocks are kind of twofold. They have a correlation to what the stock market does, but also the correlation to the oil price. We actually have ConocoPhillips. It's down a little bit. You're going to see that we also have, if you look at IBM, it's up. And that's continued to kind of surprise, okay? And if you actually take a look at Mo, a little Altria there, slightly flat. Microsoft is continuing to actually push up, decent little move there. And if you look at NEM. Now, what I'm looking for in the portfolio is, do we have any positions that are really, what type of trends are they in? And that type of trend that they're in is going to determine what we might consider. What do you mean by that? Well, if I actually go to this little setting there, what I'm now going to do is I'm going to type in that trend, and I'm going to see if I have that in the paper money account. I'm on someone's different computer and I don't have it, but maybe let me see if that works. I'm on a different computer. Let me see if it works. Okay, so it does. So what I'm doing is I'm looking to see what type of trends do we have on these stock positions, okay? Now, what you're now going to notice is, if I looked at, let's say, ConocoPhillips, it's in trend 4. It's a vertical, okay? It's not as sensitive to direction. If we looked at IBM, 23 shares of stock, this is more sensitive to price movement because it's dollar for dollar. Meaning if it goes down $1, we have 23 shares, we're down $23, and so on. If it goes up $1, it's up $23, right? We get that. Now, you're going to see that Mo is in trend 3. Now, a little lucky so far, but I've been a good boy. Now, if you take a look at this, Microsoft, trend 3. God, another good boy, okay? So I was expecting something a little worse than this. And if you look at NEM, it's trend 3. It's, my gosh, okay? It's not my birthday, but I got a couple stocks here that are still in trend 3. What's the moral of the story? Well, just because the S&P is going down doesn't mean everything's going down. Case in point. Now, the one that it's under pressure is you're going to see Travelers. Now, remember, it's not just knowing about the technical indicators. It's about how do you practice them in a paper money portfolio. This is not a magic show. I don't do magic shows. We want to actually know how do we do technical indicators and actually manage it with a portfolio. That's where actually it really comes in. So let's say the investor says, you know what, James, here we go. We got 268 and the stock is at 263. We want to double check based on what we've been talking about the last couple weeks. We've really been talking about, let's go to the market watch, charts, and I'm going to type in TRV. Now, what do you think we're going to do? Well, with what we saw on some of these charts, is it wouldn't be completely surprising to see some of these stocks getting pushed down. Now, TRV, and I mentioned this on Thursday, and I'm going to re-mention this, is this could have been stomped out already, okay? Selling is a part of entering. Repeat back. Selling is a part of re-entering. This is not stock collecting. This is stock trading and or investing, okay? Now, what you're now going to notice is the investor might say, James, if I was going to set a stop using that 8 or 10-day low, well, that's going to be right at 259. 259.04. Okay, so what I'm going to do is I'm going to go back and I'm going to right click right on that and just make sure that the seat belt, so to say, is right on 259.04. Right click, create closing order. Now here's the deal. Knowing about it is different than doing something about it. Fair? Not even going to go further. You know exactly where I'm going with that. Create a closing order with stop. And so now what I'm going to do is, it's now going to take us to the trade tab, and I'm going to type in 259.04 stop data GTC. So first homework assignment here is, has the investor looked at the indicators they already have and said, are they practicing using bearish technical analysis? And with that is, are they adjusting stops? Are they manually exiting? Question mark. And or are they protecting? Okay, maybe through options. Now, what I'm going to do is here is, if it says illegal, that means that there is an existing stop loss on that already. I will double check that. I don't see it. But if we do have it, okay, let me just type in TRV for just a moment. And so it looks like there is a stop. Let me just double check. So we did, okay? But I need to move that up. You're going to see that the existing stop is 254.80. So I'm going to move it up to 259.04. Right click. I'll say cancel replace order. 259. Cancel replace order. There it goes. Let me just delete this line. And let me go back to that since we can see it. Try to get that to adjust. There you go. And we're just moving the stop. Was that 259.08? Okay. Good. Confirm and send. And now what you're going to see is we're just moving the stop up. Ladies and gentlemen, this is the first step, okay? Because if you're a stock investor or you're trading options, the stops are the first line of, you're saying, look, I have a pre-built stop in place. Remember, the stop is not saying that's where it's going to fill. It's a trigger to sell. Sometimes we say as investors, I'm not good at selling, but the investor never had any sell orders to begin with, right? So we want to make sure that we have that. Now, I want to kind of now go back to when I look at a stock like NEM, okay? Shares of stock were purchased at 50. They're at 59 change. When was the stock order placed? Well, we got it twice, okay? Now, if you look at this, what you're going to see is we have a dollar cost averaging as well. And we're going to take a look at this now. And I want to kind of pull up, where's NEM and what is that trend doing just before we look at a new position. When I look at, let's say, NEM, what you're going to notice is, and by the way, this is not a bad problem to have, okay? If you look at NEM, what the investor is trying to do, they're trying to have stocks or option positions that are long when the price is above the moving average and or there's green shading. It is, okay? Now, if we go to the next chart, what you're now going to see is these lines, these little these dots here really represent days high. Right click on that line, and I'll share this with you. It's a 10-day high. Right click on the blue dotted line, 20-day high. Is that a bad sign when those stocks are hitting highs? Highs, 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 highs? No, that's what you want, okay? Confirmation upward trend. Now, what you're now going to notice is we don't have anything to do on this per se, okay, right now. But that does not mean that the investor is maybe saying, hey, I'm just going to sit back and do nothing. They're saying, look, I know what I'm going to do. I'm waiting to move up the stop. The white line, that's an 8-day low. The red line, that's a 10-day low. And so what the investor is saying is, geez, I would like a flag back and then get the day's lows to move up a little bit more aggressively. But that stop is down here at 52 and change. What we need is some days to go by, and these lines should move up pretty aggressively if we can consolidate, okay? Now, are there any questions with this? Yeah, now James L says, NEM take profits and run away, trade another day. Well, it kind of depends on what you think gold is going to do, right? If you actually think gold is going to go to the upside, why on earth would you sell NEM if you thought there was a correlation to that? That's a question. If you thought gold was going to go up and NEM is correlated to gold, why would the investor sell NEM? Okay. If someone actually thinks there's maybe geopolitical things happening out there where maybe there might be some underlying support levels of gold, why would they sell NEM? Okay. Now, NEM is not a pure play on gold. NEM is tied to the stock market as well. Okay. So it's not a pure play, but it has some correlation to what gold does. Now, again, if I went back to studies, and if we went to, let's say, studies, quick study, pull this back up, compare with, I'm going to move it to custom symbol. And what you're now going to notice is if I typed in /GC. Now, if I type in /GC, what this is going to do is it's going to really show the price of actually the candlestick chart is NEM itself, and the purple line is really the gold price. And what you're going to notice is as gold has actually been going up, NEM has been going up as well. So here's the deal. Here's the caution, I would say. If someone just kind of gets in and then get out, they're, in this case, I'm talking about in this example, they're kind of selling out of something that has a historical relationship, and we're wondering, could that trend continue? You know, I'm not sure if that's really the one that maybe some investors would say, yeah, that's the one that the investor is going to sell. Now, let's kind of talk about, well, maybe what might be an example of a stock that's a little bit more under pressure here. Well, let's try to find one. Okay. Now, if we went in here and actually, I'll just kind of point up just super quick. Like if I went to IBM or Microsoft and said, yeah, maybe that's what the investor should do. Sell IBM and Microsoft. Well, when we actually come back and we actually look at this and say, what type of trends are we seeing here? I mean, that's higher lows. We can see the higher lows. If you say, I can't see the higher lows, James, I can't see the red and green candles side by side. The easiest way to do it outside of visually just circling the red and green candles, go to chart type, candle, and then go to Heikin Ashi. And if you go to Heikin Ashi, it's even easier to see it because it smooths out the candlesticks. Look, red and green candle, side by side. Red and green candle, side by side. What is this really what are we trying to see? We're trying to see the higher lows. The higher lows is when the stock price stops going down. And then the green candle is the start of the up move, represented by red and green candles. And what do you notice on IBM? Should the investor maybe just consider saying, I'm just going to go in here and sell? Well, is the investor truly trading off technical indicators? No, they're not. They're trading off emotion, right? There's not something on that chart, at least the chart we're seeing on higher lows, that would tell the investor, say, I'm going to sell. Now, could someone say, well, James, when I looked at the moving averages, I did see some weakness there. Like what? How could someone look at IBM using moving averages and say, James, I tightened my stops, or I manually ejected? Well, they actually did get a crossover. So if someone said, James, I like the 10-period moving average to go red, it did, confirmed. We also, for example, saw that the moving average crossover negative. So if someone said, James, I like step 2, that was step 2. Now, if they saw that and they manually ejected, they sold based upon their criteria. If they said, no, I like to have confirmation, I want that 20-period moving average going red, it didn't do that, okay? So there's pros and cons of selling on earlier versus selling later, okay? Now, that's if someone just manually went in and sold. If we said, well, James, if someone saw the likelihood of being stopped out become greater, does that mean that the investor was stopped out of the position? Well, let's check. If someone saw in the last 2 days that actually IBM was turning more negative and they moved up the stops, would that stop have triggered? We do not see if they moved up the stop. This was Friday's stop. This is Monday's stop. If you're moving up intraday, there's nothing wrong with that. But it shouldn't have triggered because the price did not go down to that price level during the market hours from 9:30 to 4 p.m. Eastern. Okay? So the moral of the story is if you manually exit, you're not allowing the stops to play out. You're just manually ejecting. Okay. And why would someone do that? They're more confident on their exit. And they probably have a lot of positions that they just say, look, I got a lot of positions and I just want to try to raise some cash. Okay. Now, are there any questions with this? Yeah. Now, Beach Life says geopolitical events can elicit emotion. Okay. Yeah, you're absolutely right. I mean, you read Facebook and different things. What people say is the most craziest thing ever. And the funniest thing about Facebook or anything like that, they always assume that their viewpoint is right. Sometimes they're not even right, but they just kind of use it as a dumping ground of their thoughts and feelings. Take it with a little grain of salt, don't you? So, anyway, now, so first off, what I want to do is I just kind of want to show you that. I want to kind of challenge you in looking at your own paper money portfolio, and I want you to be looking for these manual exits. We always talk about the 1, 2, 3 method. We've had practice on also adjusting stops. That is the first homework assignment. Okay. Now, when we look at some of these charts that we're in, right? When you look at Microsoft, same idea with Microsoft. If we had seen some weakness in Microsoft, and I'm talking about the positions that are in the paper money portfolio, not hypothetical, just new examples. These have been trades that we've been talking about. We have not really seen where it's sold off and gone down to that low. Of the stocks that we've seen, it's really been Travelers that's gone down to that low. Okay, and we've talked about the stop there. And the other one that we've also kind of have in the paper money portfolio, and we're following through. And you say, well, James, might the investor sell Altria? Well, one of the kind of things about Altria is it's not. So I want to go back to the comment that said, when you have geopolitical events, it kind of like, fuels emotion. Well, we know that when people sometimes are stressed, they can maybe eat or drink a little bit more. Okay, that's true. Or could be. We also know that some people might smoke. Now, I'm not judging smokers. I mean, when I lived in Kentucky, the guy who lived behind my parents' house had a tobacco farm. I've done tobacco farming before. I'm interested. My parents were in agriculture. My family was in agriculture. It's a very interesting kind of line of work. You don't see it that much in Kentucky anymore. You have to really try to go out there and find it. Not judging people that smoke. But if you look at Altria and says, hey, might the paper money account sell Altria? We don't necessarily. We see more of a consolidation. And some people might say, look, I want some of these stocks that might also have some yield to it. Okay, so what's the yield on Altria? Answer, it's 6.76%. Okay, now if we take a look at that, now we know with dividends, right? They're not guaranteed. We know that they can change. It can be completely cut to zero. They could also raise. But the other part of the dividend yield is it's not the same percent, okay? That's based upon the annual dividend divided by the current stock price. Now, I want to kind of do a trade here and where the investor says, James, I want to try to get in a dividend paying stock, example given Mo. We're going to add to the sample position. But I'm going to play a kind of a game of, or play a strategy, I should say. And the reason why I use the game is a lot of times when people get in, they're nervous. Well, how do we try to take some of that nervousness out? What type of strategy can the investor do where they actually say, look, I'm going to go long the shares of the stock, but actually have a right to sell? Now, we're going to call this stocks with a prenup. Now, that's what some people call it, okay? I'm not sure if I'd really go there. But there's an out, okay? And when we say prenup, that's what I mean. There's an out, okay? And what I'm going to do is I'm going to go to the paper money account, and I'm going to go to the trade tab, and what we're going to do is going to type in MO. Now, step number 1 we're going to do is we're going to buy the shares of the stock. Try to add to the position. Click on that. Now, if I click on that ask price right there, we're buying the shares of the stock thinking, could the price go higher? Now, when I bring up Mo and I look at this 3-year weekly chart, we've kind of been in some higher lows over time, and we could see those. Okay, and if you kind of take a look at this, we're trying to push back up, and we're almost getting our nose back above that 20-week moving average. Not a bad trend. Now, trends are funny because we can see the trend historically to now, but trend does not mean what it's not guaranteed that it's going to be from now into the future. But could those trends continue? Okay. Now, if we take a look at, let's say, that trade, remember when I kind of talked about having an out? Okay. So we're going to go down to where it says single order. And what we're going to do is we're going to say first triggers SEQ. Okay. Now, when I go first triggers SEQ, what I'm doing really in this case is I'm saying, look, buy the shares first, and then I want an out. Now, the out doesn't last forever. Okay. The out is not free. And what the investor is doing is saying, James, I'm concerned about what might happen in the next couple of days. How do we know what's going to happen? Now, by the way, we could say that every day. We could say that every week. Because next week, it's just going to be someone different, just like it's been historically. So a lot of times when we see different things in the world, we're kind of thinking, well, it didn't happen before. But actually, when you look back on the chart and see how many conflicts we've gone through, you can't even see the chart because there's been so many conflicts. It's just like playing the game of basketball. There's always going to be contested shots. In the world of investing, there's always things that can push the price around. Always. You might not think so, but they're there. Now, one of the things about, let's say, Mo is it doesn't really have high implied volatility. This kind of favors this type of strategy where you're buying the stock and actually buying the put at the same time. It's also known as a married put, okay? And what we're going to do is if that implied volatility is probably below 25-ish or lower, it means the puts are lower, okay? Now, what we're going to do is we're going to buy the put. What does the put give us? Does it give us an obligation or does it give us the right? Well, it gives us an obligation. That's not true. You should just stop right there. Just say, James, that's not true. Take that back. It gives you a right. A right to do what? Remember how you used the word, it gives you an out. What does it give us an out to do? It gives us an out to sell the shares. Now, wait, the one I clicked on was a right to sell the shares at 61. But wait, if we buy the shares at 60, 38, you have the right to sell the shares at 61. Maybe you don't want to necessarily go that close. Maybe, for example, you say, you know what, I want to have the right to sell those shares at 59. Now, this becomes simple math at this point, okay? If we buy the share, now here's the thing. You ever notice that when people are emotional, they don't want to talk about numbers, okay? Look, the longer that some of us live, the more that we realize investing and trading is math and psychology. And emotions, what is emotions? What am I supposed to do with it? Okay. Now, so when I look at the math, okay, 60-38, and let's say the investor has the right to sell the shares at 59, that's a risk of how much? Okay. Answer, $1.38. Add how much is the investor willing to buy the put for? 61 cents. If you add those two up, $1.38 plus 61 cents, it's about $2. So whether we last week or a month ago or 2 months ago, if we were willing to risk $2 or $200, and then today here we are risking $2, what's the difference? Not a whole lot. Okay. Now what we're going to do is now the advantage of buying the put is it's not a theoretical right. It's not a depends where it gets filled. You have a contractual right to sell the shares at 59, which you can exercise yourself. Okay, so that's kind of nice. Now, disadvantage, negative time decay. Okay, there's a cost to it. Whatever you buy those shares for, 60-38, if this expires completely worthless, it adds 61 cents on top of, theoretically, 60-38. People talk about puts all the time. I like to see some examples of people that have done some. Okay. So theoretical knowledge is different than actual real application. And, that's a big difference. Now, what I'm going to do, so the investor is a little concerned and some investors say, look, James, I don't want to buy puts that are more than maybe a certain percentage of what I'm buying the stock for. So they might say, look, if I buy the puts 20 to 50 days to expiration, how much are these puts? Well, they're 61 cents. The stock price is $60. It's about 1% of the stock price. And a lot of investors might say, sure, stock goes up by 1%, I get to break even, assuming the put goes all the way to zero. For some investors might say, James, if these puts were like $1.50 and I bought the shares for $60, that's over 2%. For some investors that might say, you know what? The more I pay for the puts, the more the stock has to go up just to break even. For some investors, their cap might be 2%. So what we're going to do in trade number one is we're going to buy the shares of Mo. Why? Well, we're kind of expecting if there continues to be a little volatility in the marketplace, some investors, they might go from growth areas, okay, not all, okay, but they might try to move back to maybe more income value type plays. Now, I did not make mention, but when you look at, let's say, oh yeah, Altria is super expensive. Well, Altria only has a trailing PE of 10, okay? So we can't necessarily say it's super expensive with a trailing PE of literally just 10, okay? Now, we can get into a forward discussion, but a trailing PE of 10, that's pretty low currently. Now, the other one I want to kind of think about is, in our example, is I want to pull up a stock. Now, this probably would not surprise you, okay? I'm going to go back to a stock, Lockheed Martin, okay? And I just want to kind of take a look at some of these aerospace and defense stocks. And the question that we have here is, are they starting to break out? So if we looked at this and said, is Lockheed Martin starting to break out? Yes or no? Yeah, see, I'll fix that. Thank you. Okay. Is that starting to actually break out? If we kind of went back to the technical indicators we use, which is the 8, 10-day highs, the 10-day highs, 20-day highs, 55-day highs. 5 days ago, 6 days ago, it actually hit that. It actually paired back. We do not see that. The key word is yet. Okay, so we don't see that yet. If we're going to keep an eye on that, right? We know that if there kind of tends to be some geopolitical stuff, could some of these companies, be getting some new defense contracts? Okay, so we're going to keep an eye on that. If I went and said, well, what about General Dynamic? Okay, if I looked at a stock like General Dynamic, now if you said, James, I don't even know what they do, go to the Analyze page. We're going to actually sync it there. And if I actually did that and say, what do they do? Aerospace and defense companies. Okay, so if I take a look at this, if we said which one is a little bit closer to maybe trying to make some higher lows and or bouncing off support, we would actually probably say General Dynamics looks a little bit more bullish so far than Lockheed Martin. Over the last couple of days or weeks, we've really been kind of seeing some higher lows. And if we look at kind of where most of these touches happen, they were probably right there. Now, some people might say, oh no, the earnings is coming. Some other investors are saying, good. Now this might cause some investors to speculate. And also, if there's earnings coming, it kind of might force some investors to make some decisions upon, do they want to get in? Do they want to sell? What do they want to do? Okay, but there's a deadline. Now, what I'm going to do is I'm going to go to the trade tab for just a second. Now, one of the other advantages of, let's say, kind of stocks and options, in this case options, is the investor might say, James, I want to actually do a trade here, but I really want to kind of look and see, are there any options that might be liquid? Now, we cannot assume that the stock is, if the stock is publicly traded, that the options are liquid. I just tend to look at the bid-ask spread on the call and the put side at the money to see if there's liquidity. Usually anything with 20 cents narrower on the bid-ask spread at the money options on the monthlies, not liquid, not liquid, not liquid, and not liquid. So we'd like to maybe consider, if the investor said, why would the investor do an option on this? Or could they, I should say? Well, they could, just the bid-ask spreads are really wide, which probably tells us illiquidity currently. Now, what we're going to do on this for the stock traders out there, this is why sometimes there are stock examples, okay? It's not the only reason to do a stock. We're going to go to buy custom with OCO bracket. Now, what type of indicator are we really talking about here? Well, 5 days ago or so, we really went to that 10-day high. We can see that it hit it. It also really went to, in this case, the 20-day high. Now, just because it went to that 10, 20-day high does not guarantee that the stock is going to go up. Matter of fact, it went down. It pulled back down to a rising trend line. Now, for some investors, what indicator are they really trading? Well, it's a little upward trending stock, and it is really showing currently right now a green dot, which is signifying currently a close above the high of the low day. Now, when I say close above the high of the low day, we're really talking about the last 30 minutes of, the last 90 minutes of the market. Okay. If you really want to tighten it down, you could say 30 minutes. Here we are in the middle of the day, this is what we call trading above the high of the low day, not closing above the high of the low day. Okay. We're not in the last 90 minutes. So it's trading. Now, what I'm going to do is in this case is this is where the current stock price is right here. Fine. Target price we'll talk about, but we'll put GTC there. And what you're now going to notice on the stop, we're going to go day to GTC as well. So what I'm first going to do is I'm going to take this diagonal line and I'm going to move it forward. Okay. So you have to understand that when news comes out, there's always kind of different types of things that cause things to move. Okay. Even bad news for one area might be good news for another area. Okay. Now what I'm going to do is I'm going to right click. I just right clicked on that line and extended it. If I look and said, where's the diagonal line now? Well, it's right at 277.79. Well, if I took 277.79 less 2%, it's really going to get me 277.79 less 2%. It's going to give me 272, okay, 23. That's very important what I just said, okay? Not because I said it, but it's the truth. Sometimes what's bad for one area is good for another. What is it? What might be that inverse correlation? Now, we're talking about geopolitical things that might maybe hurt the market per se, but for some industry groups, they might benefit off that pressure from geopolitical events. And those companies might get the contracts or even extend the contracts or new contracts off that. Okay. Now, I'm not making it political. I'm just saying as an investor, you got to think about both sides, not just one side. Okay. Now, what I'm going to do is I'm also going to go back here. And if we took a look at this and said, okay, if it were to go up, what might be the next level of resistance? Well, that next level of resistance, if it went up, that last little drop there, that was 292. And if we kind of look about some consolidation area, it's right about 300. For time's sake, what I'm going to do is I'm going to kind of put it at the bottom where we kind of broke down before, right at about 300. Okay. I'm going to put it right at 300. So the one thing I want us to kind of watch over the next couple of days, Lockheed Martin, General Dynamics, what other companies in there, NOC, Northrop Grumman, are some of those stocks starting to get a little bit to the upside? I'm going to leave it right there. Now, I want to pull up NOC and just see if we see anything. I don't see anything yet on that, but it is trying to flag and push itself back up. It's positive for the day. I want to also kind of bring up in the last, just kind of point out, remember we kind of talked about if you kind of have a geopolitical event and it might lead to certain things being bad. And what are those certain things being bad? Well, oil prices might go up. Oil prices might go up. Well, if you drive some gas guzzling vehicles like I do, and my wife does, and I'm not proud of that, it's just what it is. My wife bought an Infiniti QX80 and it was rated 2 out of 10. And my wife says, is that good? I'm like, honey, that means that number 1 out of 10 or a rating of 1 out of 10 would be a tank. Okay, so no, a 2 out of 10, honey, is not good. Okay, now the reason why I say that is if we continue to see oil go up, if it does, well, might that kind of cause some influx of sales where people say, look, I don't want to actually have gas guzzling vehicles, and might it cause some EV vehicles that might have some potential subsidies as well, potentially still, and other incentives to where people are saying, look, I want to actually try to get in maybe something like this. Now, in our last example, what I'm going to do is I'm going to try to take exactly what I've talked about, which is, hey, for some areas, it might be bad. Yeah, sure. But for other areas, and this is what's kind of nice about the stock market is, but for some other areas, it's not necessarily a negative. It could be a positive. Okay, ladies and gentlemen, that's what's so interesting about the stock market. Okay, is the investor can change positions or enter in new positions or consider them in about 60 seconds. Okay, and think through it and say what might benefit from that situation. Now, what I'm going to do in closing here is I'm just going to sell about a 35 delta put if I can. And the last one I'm going to do here, trade number 3, is I'm going to go here to right there, and we're going to sell the 337.50 put. Now, I want to double, and I'll leave it right there. I'm going to sell, just to be even, we'll sell the 335, okay? I'm going to try to go in increments of $5. We'll sell the 335, okay? Now, I'm out of my time here today. What I want us to kind of think about is like a true technician where you're looking at both sides of the trade. What's the positive? What's the negative? What's the negative? What's the positive? Who benefits in these circumstances? And it happens, okay? So keep an eye on that. I'm out of my time here today. Stay tuned for cover calls and cash secured puts coming up next. I want to also thank all of you here today, and also thank Michael Fairborn for letting me use his studio here today. And with that said, thank you so much, and it's great to be with you here today. And stay tuned for our next webcast coming up right at the top of the hour. And don't forget to subscribe to the Trader Talks channel with Schwab Coaching. Thank you so much. Take care. Bye-bye.